Hi guys, today I'm going to talk about intangible assets, IAS 38. This is a very important area for students who are doing ACCA F3 financial accounting, ACCA F7 financial reporting, CMA part 1 where they require comparison of GAAP and IFRS. Also students who are doing CIMA and CPA. So what is IAS 38? IAS 38 is specifically focused on intangible assets. So first we need to know what are intangible assets. Intangible assets are all those assets which cannot be touched and they don't have a physical existence. In fact, there are identifiable non-monetary assets. To give you some examples, we have Goodwill, copyrights, trademarks, patents, and research and development cost. Goodwill is dealt with IFRS 10 and IFRS 3 where we talk about business combination and consolidation. So here our focus would be on research and development cost. So before I go explaining the treatment for research and development cost as per IAS, we need to know what is meant by research and what is meant by development. So research cost as explained by IAS 38 is actually an organized and planned investigation undertaken with the prospect of gaining new scientific knowledge and understanding. So which means we are researching to gain new understanding. So the best example of research would be, we have all been through COVID-19 where pharmaceutical companies and all these scientists were busy doing research to find a vaccine. So all the amount of time, resources which was spent in finding what chemicals, what medicines, in what proportion to be used so that this COVID can be dealt with. So that was the research part. Development as per IAS 38 is the application of research finding to plan, design or a production of a new or substantially improved product, material, devices, product, process, system, services, but prior to the commencement of commercial production. Once scientists knew, okay, this is the type of vaccine, the chemicals, the medicines to be used, then they start applying it on making a vaccine. That is the development stage. So obviously we are talking about a prototype, a sample here. That is development. If you want to know what precisely is covered under research and development, I would suggest you read IAS 38 para 56 and 59. So that will give you what are the activities which are precisely covered under research and what comes under development. So once you are very clear that these are research and these are development activities, the next step is we need to know what is the accounting treatment. The very first thing is, when we talk about research cost, all expenditures spent on research are immediately expensed out, means they are charged to profit and loss. So all those expenses which are incurred in this phase are charged to profit and loss. They are recognized as an expense in the period which they are incurred. Simple and straight. So when it comes to development cost, there are certain criteria, recognition criteria. If and only if all those criteria are met, only then the amount spent on development would be capitalized. Means all costs spent on development would be taken as an asset, intangible asset. So here we need to understand what are the criteria. So we have some recognition criteria as per IAS 38. Let me tell you, all the criteria should be met. Okay, so the very first one is the probable future economic benefits. The amount we are spending on development, would this amount help the company to earn probable future economic benefits? If yes, how? Which means what you can do is to see the product which we are developing, does it have an external market? Or would we be able to use it internally and have a competitive edge? Another criteria to look at is the intention to complete. I give you an example. One of the professional qualification I started a long time back, but I did not complete. Why? For many reasons. So sometimes companies may start up a project, may start a R&D, and in the end they lose interest and they have no intention to complete. Yes, they have spent a lot of money, but now they're not willing to go any further. So if there is an intention to complete the development process, only then the expenditure spent on research should be capitalized. Another criteria to be met is availability. Now we are talking about availability of appropriate resources. We are talking about material, we are talking about finances, so on and so forth. So if we have availability of, let's suppose, the necessary materials, the funding available to complete the development process, yes, then the cost can be capitalized. The next important criteria is ability. All right, if we make the product, the good, the service, will we be able to use it? And I've seen it in many companies. They come up with fantastic ideas, fantastic services, creative ideas, new products, but they are unable to use it commercially to get the future economic benefit. So if you are unable to use it, no matter what type of product it is, how good it is, it will not give you future economic benefits. Another important criteria is the technical feasibility for completing the intangible assets. Now, when I'm talking about technical feasibility, we are talking about the technical expertise. Sometimes you may have the money, you may have the materials, but what about the technical capability and experience? The scientists, the engineers, the consultants, if they are not there, you will not be able to complete the development process. So only and only if you have the technical feasibility and expertise to complete the development procedure from A to Z, only then the cost incurred can be capitalized. Lastly, we are talking about the E, which is here, we are talking about, will the company, will the entity be able to measure reliably all the expenses which are directly attributable, directly related to the development procedure. Please remember, in a company they spend a lot on different things, but we need to know that these expenditures which has been incurred, are they related to development? If yes, then they can be capitalized. So please remember this mnemonic, which is pirate. Now we are not talking about pirate, don't think about Johnny Depp. This pirate is basically for the probable economic benefit, for intention to complete, for availability of resources, for ability to use the intangible asset, for technical feasibility, and is for the expenses, whether these expenses are directly attributable to the development procedure. So now we are talking about what if the development cost meets all the criteria. Yes, it should be capitalized. When an intangible asset is capitalized, now we have two options. Either to amortize it or give it a test of impairment, annual impairment review, which we call. Now, what is amortization? For example, if we talk about, let's say, patents. We have a patent or a copyright for some intellectual property. So we only amortize the intangible asset if it has a finite life. For example, our copyrights are registered for 10 years and the amount of copyrights is, let's say, 100,000. So the value of copyright is 100,000. It is registered for 10 years. And we can use straight line method, means cost minus salvage value divided by estimated useful life. In this, the life is 10. So if the amount of copyright is 100,000 and considering zero salvage value and the estimated useful life is 10, so annual amortization will be 10,000. So intangible assets are amortized over the years, over the useful life, whereas non-current assets are depreciated. So that's the difference. Amortization is more or less like depreciation, but amortization is done for intangible assets. Depreciation, the word is used for tangible non-current assets. So when we talk about intangible asset, yes, their costs are also spread over its useful life, but we call it amortization. So your amortization expense is 10,000. So once amortization is recorded, the double entry is, you can write amortization expense, debit 10,000, and accumulated amortization 10,000. This 10,000 will go in your profit and loss as an expense. This 10,000 will go in statement of financial position, okay, and it will be subtracted from this amount. just like depreciation. Now, as I told you, there are two options. If your intangible assets have a finite life, a definite life, 10 years, 15 years, you can amortize it like this, cost divided by the estimated useful life. If it does not have a finite life, then we have to give it a test of impairment, or we call it annual impairment review. Impairment means the loss in the value. So what if copyrights today has a value of 100,000? And at the end of the year, what if its carrying value is just 700,000? That means it has impaired by 300,000. So every year, annual impairment reviews to be done only when we don't have a finite useful life. So another question to ask is, when amortization should begin? Amortization should always begin when the asset is available for use. Okay, how to amortize? I told you how it is done. Only if it has a finite useful life. Now, should we always amortize? The answer is no. We only amortize if we have a finite useful life. If there is no finite useful life, we go for annual impairment reviews. Then we are talking about the disclosure requirements. According to IAS 38, disclosure requirement for financial statement is that we have to have a reconciliation of opening balance of intangible assets with the closing carrying value, taking into consideration all the additions made during the year, all the deletions made during the year, any reductions during the year, any amortization or any other movement. Now in the end, you need to remember is, when we are amortizing development cost, its carrying value should not be more than the probable future economic benefits which we are expecting from the assets minus any future incremental cost. So one thing, if you remember that I wrote goodwill here, as I told you, goodwill is no more covered under IAS 38, it is covered under IFRS 3 business combination. But for a while, let me tell you something. When we talk about goodwill, there are two types of goodwill. One is internally generated, the other is purchased goodwill. Purchased goodwill is discussed in IFRS 3. When we talk about internally generated goodwill, that is never capitalized. Okay? Any company which self-claims that they have a goodwill, internally generated goodwill is never capitalized in the books of account, only if there is a purchased goodwill. And what is a purchased goodwill? When you buy a business for more than its fair value. I'm giving you an example of purchased goodwill. What if I'm interested in buying restaurant A? So the market value of restaurant A as compared to the value of their net identifiable assets like building equipment, kitchen equipment, furniture, so on and so forth. If I add the value of all their assets minus the current liability, net assets of the restaurant is 1 million, and in the market every second person is willing to offer 1.5 million. So I purchased the restaurant for 1.5 million. So the amount paid over and above the net assets fair value of the asset is considered goodwill. That is purchased goodwill. That can be recorded in the financial statement as intangible asset. But internally generated goodwill is never recorded and capitalized. So ladies and gentlemen, I hope you have understood IAS 38 intangible asset with special focus on research and development costs. If you're new to my channel, please consider subscribing it. Press the bell notification button so that you get my videos on a timely basis. If you like this video, please give me a thumbs up and share this video with all your dear and near ones so that others can also benefit. Thank you so very much for your precious time.